Ever placed a trade only to watch price barely touch your stop loss before reversing in your favor? Congratulations, you've just been stop hunted. Smart money knows where retail traders place their stops, and they exploit it. But big players, banks, institutions, and whales aren't just messing with you for no reason. They're hunting for liquidity so they can enter the market with massive positions. And where do they find that liquidity? Right where retail traders place their stop losses. But don't worry, today I'll show you exactly how to spot and avoid these traps, so you stop being the hunted and start trading like the predators. Hello and welcome back to the Premium Forex channel. Now, you probably clicked on this video because you're tired of getting stop hunted. Well, in this video, I'm going to show you a little tool I use to avoid this from happening to me. Let's get started. Take a look at this chart. As you can see, price has reached an area of supply. This is a very popular price level where price is likely to react. Most retail traders are aware of this and prepare to enter, either as buyers or sellers, expecting the market to move in one direction or the other. But unfortunately, trading isn't that easy. Instead of rejecting or breaking this level, the market first triggers the stop losses of both types of retail traders. Why? To grab liquidity and then make the real move. So as you can probably already guess, we need to figure out a way to avoid this trap and actually make a profit. An easy and simple way to do this is with the golden pips strategy. Both the golden bands and golden signals give clear entry opportunities that stay out of the way of any stop hunts. If we wait for price to reach the golden bands and get a golden sell signal, we will know the exact point where we need to enter. The strategy has been coded to avoid stop hunts by taking note of obvious support and resistance zones before printing signals. Now let's look at a few examples where you can see the golden pips strategy. Avoid stop hunts. Here, you can see a strong level where price rejected in the past. This would be a great area to take a trade if price were to return in the future. And sure enough, when price does return, there's an immediate rejection to the downside, prompting sellers to enter their positions. Then, price retraces to the same level, sucking in even more traders who missed the first move. Now, enough traders have been trapped. It's time for smart money to sweep liquidity and wipe out their stop losses. This also encourages retail traders to revenge trade and jump into a breakout move. But after that, price moves in the opposite direction, hunting their stop losses again. Now, let's apply the golden pips strategy to this chart. We can see that we got a signal to short on the first rejection. But on the second move, the signal was delayed until price was actually ready to drop. As you can see, the golden pips strategy took the guesswork out of your entry and allowed you to enter at the right moment. Now, let's look at another example. Here, we have a strong demand zone where price has bounced from before. This is a spot where buyers are lining up, thinking it's a safe place to go long. When price reaches the zone, there's an immediate reaction. In most retail traders' strategies, this is an opportunity to enter a long position. But this is where smart money sweeps liquidity, trapping retail traders once again. Now, let's apply the golden pips strategy. Notice how we don't get a buy signal immediately? That's because the indicator is programmed to avoid liquidity grabs. Let's zoom in on the golden bands. Notice how price never quite touches the bands until it's actually ready to make the move. The golden bands act as our shield, letting us know when price is really ready to move or when it's just messing with retail traders. They help us time our entries perfectly so we can avoid the stop hunts that smart money loves to play. So, remember this, smart money is always hunting for liquidity around obvious support and resistance levels. They exploit retail traders' stop losses and use them to enter the market with big positions. But by using tools like the golden pips strategy, you can avoid these traps and make trades based on clear, actionable signals. So no more guessing, no more stop hunts. Now that you've got a solid idea of how stop hunts work and how to avoid them, you can start using the golden pips strategy to trade like the pros. It's available on TradingView as well as MetaTrader 4 and 5. Make sure to apply these techniques, and keep an eye on the charts. The next time price seems to be moving in your favor, you'll know exactly where to enter and where to avoid the traps set by the big players. If you found this video helpful, don't forget to like, subscribe, and hit the bell so you can stay ahead of the game. See ya in the next one.